Greetings, everybody. I'd like to talk about how you can invest in the U.S. Treasury yields. As you may know, a lot of the narrative around the stock market during the past 2 years has been headlines like U.S. stocks drop after Treasury yields once again surge. So if stocks tend to drop when Treasury yields rise, some people may want to invest in the Treasury yields so that on bad stock days, at least one part of their portfolio would gain something, if the cause of the bad stock day is rising Treasury yields. During the past 3 months, notice the 10-year Treasury yield going up and the S&P 500 going down. If someone was, or whoever was, invested in the yields, that part of their portfolio would have done well, while the stock part of their portfolio declined. 7 Treasury Yield ETFs that I found on Merrill Edge and that I'd like to share with you are here in this table. The index column shows whether the ETF tracks the 7 to 10 year Treasury Yield or the 20+ year Treasury Yield. The leverage column lets you know which of the ETFs returns 2 times or 3 times as much on a daily basis as the non-leveraged Treasury Yield ETFs. And the average volume column lets you know how many shares of the ETF are bought and sold on average every day. Now let's see what's happened with the TTT ETF, which is 3 times leveraged during the past 3 months. As you can see, it's gone up by 57% as the 20-year Treasury yield has gone up. And during the past 3 years, the ETF is up by 277% as the Fed has hiked interest rates and Treasury yields have gone up. But be careful and remember that because the ETF is triple leveraged, it can have big declines like this one here when it dropped by 37% in 2 months. For perspective, here's what the yield on the 10-year Treasury has been during the past 43 years. We're now at yield levels that we haven't had since 2006 and 2007, which was 16 to 17 years ago. If you think the yield will continue to go higher, you may want to invest in the Treasury Yield ETFs. And if you think the yields will go down soon, then you may want to avoid those ETFs. Some people, however, may want to go ahead and purchase the Treasury Yield ETFs regardless of where the yields go, as a hedging strategy. Hedging is when you include things in your portfolio that will go up or stay the same in value while another part of your portfolio, like stocks, goes down. In conclusion, I'm not saying that these Treasury Yield ETFs are good or bad, but to sum it up, and when deciding whether or not to invest in them, I would say to myself that if I'm truly a long-term investor who won't be bothered by temporary stock and portfolio declines, even if they last years, it may be better to just buy as many stocks as I can, and I'll probably outperform in the long run. But if I'm interested in being a trader and or with preventing my portfolio from having huge declines in the short run, then I might be interested in purchasing these yield ETFs or inverse ETFs. Good luck, everybody.